After experiencing one of the most dramatic periods of economic growth ever witnessed in Africa, many wonder if Nigeria's momentum will slow following the 2015 elections. Now, here to share his insight, Nicholas Nyamali. Now, the maturation of the local investment sector has been something that people have been talking about all over the world. Do you think that the progress that has been made should be pegged on government support, or has it been something that the markets have created for itself?
I think it's a combination of both. Government has done a lot to provide the enabling environment, and the private sector has built on that in introducing some of the products that we currently find in the capital market today.
So tell me about some of the most decisive issues that Nigerians are going to be thinking about as they enter into the polls.
I'll put that in two categories. The general populace will be looking at for security, looking at for more jobs, infrastructural improvement. Those in the economic space will be looking for stability in the currency and ensuring that the government policies, or whoever is in government, will continue to drive the progressive policies that has led to the development of the market.
The Central Bank of Nigeria says that these elections are not going to deplete its reserves. Now, from a GDP perspective, do you think that is indeed going to be the case?
The depletion of the reserves will not come from the election. I think the current fall in oil prices has seen to a fall in the reserves in the country's currency.
Do you think that the political chaos that we're seeing in the country is also contributing to some of that instability?
The political chaos, I do not think, has been responsible for some of the instability. It's more economic. The fall in oil prices has led to lower FX revenues for the government, which has impacted the reserves of the central bank.
Now let's talk about the long-term impact on crude prices.
Crude prices have been low, and recently from the $100 it's down to about 70. This will continue for a while. This is impacting government revenues, so technically I see the government going into deficit if they do not find other sources of increasing their revenues, because the current expenditure of the government is a bit high. In terms of the election, chances are they will continue to spend to bring out programs, policies before the election date. So we may run into a deficit year in terms of government spending.
We know that people are going to be watching to make sure that these elections are handled properly. If that is the case, if the country is able to transcend political chaos, do you think that that's going to amp up investor confidence in the country as a whole?
I think so. Politics is one, and it has a significant impact in terms of GDP growth, foreign investment in the country. The second issue is the stability of the currency, and I think the CBN is trying to address that currently. And if we get political stability, currency stability, I think the economy will just go to a second level.
You're an investment manager. This is your industry, your bread and butter. What do you think the government will need to do in terms of shoring up more support in the marketplace?
I think number one is FX stability. We have currently seen capital flight because of uncertainty regarding the value of the currency. Once we can ensure that there's FX stability, we think some of the funds that have left the country would come back. And I think that is what the economy currently needs, or the capital market needs today, to ensure it gets back to the boom level that we've seen in the past years.
Nicholas, you sound very optimistic about the prospects of Nigeria post-election.
Yes, I am very optimistic.